All right. It's Friday, June 17th, and there's a lot to talk about. Stocks at lows of the year. The Dow closes below 30,000. Will we see the worst week since 2020? Travel stacks getting slammed, and much, much more. Plus, we'll review the stocks that I might get assigned over the weekend. I want to take a look at those, discuss my thoughts as we head into a 3-day weekend. But before we dive in and show you what's moving the markets, today is Friday, and if this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. On a typical morning, Markus, Rockwell's founder, typically joins me, and we go through a mountain of news websites, newsletters, and reports. And with almost 50 years of trading experience and watchful eyes, we bring you the news that you need to know. We go live right here to share with you what you need to know as you head into your trading day. Now, for those of you that watch every day, thank you for joining me today. We appreciate the channel follows and likes, hint, hint. But if this is your first time here, don't worry. I know it can be a little overwhelming. So we'll post a special video just for you that will link in the description, which is a great place to get started. Now, let's go right to the charts here. And there was only one way to sum up yesterday's trading, and that was ugly. Here we have the S&P, and let me go to a 5-minute chart here. The S&P, I mean, just gapping lower, continuing to slide. And this comes after a positive reaction to the Fed statement on Wednesday. Well, in a perfect example of what goes up must come down, stocks gave back all of Wednesday's Fed day gains to finish the day lower across the board. The S&P down over 3%, and the Dow down almost 2.5%. The NASDAQ taking the biggest dip here, down 4%. With yesterday's closes, the Dow finished below 30,000 for the first time since January of 2021. So more than a year ago, the Dow was trading below 30,000. And with yesterday's close, we're back there, finishing at 29,927. And the Dow is 1% or almost 1% away from bear market territory with yesterday's close. Now, the S&P with this 3.25 point loss is down about 6% for the week. And if this does hold, it will be the worst week for the S&P since March 2020, when investors were panicking because of the pandemic, and the World Health Organization had announced that we did have a pandemic that the world was dealing with. So a pretty messy week and a messy day after what looked like some optimism coming Wednesday with that Fed statement. Well, why the drop? And I think this is where on Wednesday we had the news out, and that uncertainty, what the Fed was going to do, was a little bit of a relief for the markets. But the Fed said that the markets are stable enough to handle rate hikes. Fed Chair Jerome Powell actually saying that the economy is strong on Wednesday, when the Fed decided to raise rates 75 basis points, which was the biggest move in 28 years. But then on Thursday, traders showed that they are worried about the impact of higher interest rates and tighter monetary policy, and what that policy will have on the markets, fearing that a recession is likely or almost certain. Powell did say that there's no sign of a broader slowdown, but then yesterday's real estate data showed slowing housing starts and a contraction in manufacturing based on a survey of managers in the Philadelphia area. So here we have some mixed messages. The Fed's saying that there are no signs of a broader slowdown, but here we have just a few data points showing that this might not be the case. So I think traders said, you know what, let's go on a selling spree. Even the yields yesterday were lower. We could look at the 10-year yield, and we see here that although early on in the session we spiked higher, we finished the day lower. And this is, well, a little unusual when we have such a big sell-off. We've seen the inverse relationship between yields and the markets, and that being a focus with investors, but not yesterday. So interesting markets altogether. Just a messy day. Let's take a look at a few movers, and I want to bring up travel stocks because travel stocks taking some of the worst of it here. Here we have Carnival Cruise Lines. Carnival down 11% yesterday. And look at this chart. Let me go to a weekly chart because it's pretty interesting to see Carnival at pandemic lows. I mean, this was when Carnival went from $48 a share to about $9 a share in just a couple of weeks. There were fears about cruise lines being grounded indefinitely, maybe going bankrupt, not having any sign that they will be operating at full capacity anytime soon. And traders price cruise lines at $9 or Carnival at $9 in the heat of the pandemic sell-off, and we're right back there with yesterday's slide. I mean, that's just crazy to me. I would not be a buyer here right now trying to figure out what the heck to do with these cruise line stocks. We could look at RCL, Royal Caribbean, another one down 11.4% yesterday, just getting hammered over the last 2 days. Norwegian Cruise Lines, NCLH, another one down 11.5%. Not quite at pandemic lows, but crazy to see that we're heading right back there. We also have airlines taking a bit of a hit, even though travel's been picking up for airlines. American Airlines down 8.6% yesterday. And we also saw Delta, DAL, down 7.5%. Delta recently popped up on the scanner. I was looking at that for a minute, but decided to trade some others. I thought they had stronger charts. United down 8.2%. And even Southwest down 6% yesterday. So some big moves in the market, and airlines, travel stocks definitely taking some of the bigger hits yesterday. Cruise lines just looking ugly. Now, a few movers as we approach the open here. We want to look at Adobe, and with Adobe, oops, what's the ticker for Adobe? I should know that. ADBE. Okay, there we go. So Adobe down 5.3% pre-market. They dropped after a forecast came in lighter than expected, citing foreign exchange rates being an issue and the war in Ukraine creating a negative outlook for them. The company's second quarter results did come in better than expected on top and bottom lines, but it was that forward-looking announcement that was a concern for investors. So Adobe down 5.5%. Now we also have, let's look at U.S. Steel. U.S. Steel, ticker being X, up 4% pre-market. This was a put that I sold previously. Let's go back to a daily chart here. There we go. So U.S. Steel, some wild moves over the last couple of months with U.S. Steel, but up trading at $20.40 pre-market. This comes after earnings estimates for the second quarter came in higher than expected. U.S. Steel said it expects to earn between $3.83 and $3.88 a share after adjustments in the quarter. And this compares to an earnings per share of $3.29 that some analysts expected. So that increase, U.S. Steel was up about 7% pre-market, but coming back down a little bit. Either way, nice pre-market move here for U.S. Steel. Another mover here, we could look at Roku, and Roku adding almost 3%. Not that much of a dent here compared to where it was trading just a couple of months ago, but trading above $80 a share. Roku announced a partnership with Walmart, where Roku viewers will be able to purchase products and certain ads on their Roku device through Walmart's e-commerce platform. So that's kind of cool. Coming up with some other sales solutions there, and that partnership with Walmart. Traders appreciating the efforts there with a 2.6% gain pre-market. So a couple of movers. All in all, it's a light day for the economic calendar. Let's go to PowerX Optimizer, bring up the economic calendar. We did have Fed Chair Powell speaking at 8:45 a.m. This is not really having a big impact on the market. Some prepared statements, really just reiterating what we already found out on Wednesday. There's capacity utilization rate in industrial production. These are labeled as yellow flag, low impact reports, CB leading index at 10 a.m. So a light day for the economic calendar. And if we move over to futures, we see that, well, futures have given back some of the gains that we had earlier. Let's look at the E-mini S&P, and let's bring up a 5-minute chart. And we see here that there it was looking a little stronger, and instead we've slowly been drifting lower over the last half hour or so, with the E-mini S&P just slightly positive, the Dow slightly positive, and the Nasdaq up a quarter point, which is absolutely nothing. So just an hour ago, it looked like we had some stronger gains, not necessarily the case right now, as we head into the open, going into a flat day of trading. Now, we are heading into a 3-day weekend, so we'll see if traders want to be long the market or not. You could argue that they've said, no, we don't want to be long based on yesterday's move. But it is a 3-day weekend with U.S. markets closed on Monday for the Juneteenth holiday. Today is also quadruple witching, which means that we have options and futures expiring, and traders who are in these positions either need to close them or adjust their positions by rolling them. So that typically brings greater volume on quadruple witching days. And we'll see what the overall sentiment is towards the end of the day. But sometimes towards the end of the day, as traders are selling long positions, closing them, there can be a little bit of a dip. Now, with my trading, at this point, I'm watching positions that I have traded over the last week, BDX being one of them. Nothing for me to do today, but I'm curious to see if I will get assigned shares. I sold the 235 put. Markus did as well. Yesterday, it closed at 234.74. This popped up on the PowerX scanner. I really like this chart here. We could see, let's look at the S&P real quick, right? This is what the S&P's been doing. Let's go to a daily chart. This is what the S&P's been doing, and BDX says, things are going okay. So I wouldn't mind being assigned at 235, but we'll see if we stay above 235 or not, and if I take ownership of shares. And if I do, I will look for calls to sell on Tuesday morning. There's also MasterCard. MasterCard has some nice premiums here. Looks like pre-market we're about 310. I sold the 315 put. And it looks like, unless there's a rally today, I will be the proud owner of MasterCard at 315 a share. With these ranges that we're in right now, there's still some really solid premium on the call side. So I will look to sell calls on Tuesday if we stay below 315 and I take assignment. Marriott was another one that I traded recently. Marriott has seen some nice movement, some good numbers, and I traded the 152.50. So this one's sliding a little bit further away from my assignment price. But when I looked yesterday, just because of the volatility being high and there being a lot of IV in these options, I expect that I'll be able to sell calls on Tuesday as well. Of course, I don't want to count my chickens before they hatch, because if we trade and close above the strikes that I sold, it's possible that the puts expire worthless, which is totally okay with me. Or if they stay below the assignment price or the strike that I sold, I get assigned shares. I'm the proud owner, and I look to start making money on the premium collected on the call side. So these are the three that I'm watching. We'll see if I get assigned. And with Monday markets being closed, I will look at call selling opportunities on Tuesday morning. With that said, I hope you appreciated this stock market update. I know I had a little technical glitch on Tuesday, and I apologize for that. But I decided to switch up the software, not using that. And I'm this close to buying a Mac so I could just use the same software that Markus uses for these streaming YouTube sessions. And he really doesn't seem to have any issues with it. So I'm close to doing that. I might be a full Apple guy here soon. I got the iPhone, I got the iPad, but I've been just a holdover from the old days where when you were a trader, actually using a Mac was a disadvantage for a decade or 2 decades, but not necessarily the case these days. Anyway, that's going to do it for today's stock market update. I hope you enjoyed it. If you did, please give it a big old like so then I could brag to Markus on how many likes I got doing it solo. No, that could backfire because I really enjoy doing it with him. So either way, like it or don't like it, but we'll be back here on Tuesday morning together where we will do another stock market update and hope for a real nice week. Maybe we'll get a little bit of a bounce after the craziness we had this one. So have a great holiday weekend and we'll see you here on Tuesday morning. Happy trading, everybody.